This region around the Great Lakes has been called a heartland when it comes to agriculture. There's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're gonna have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Friday, June 20th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, July corn up a penny at 434.5. July soybeans are up 3.5 at 1078.25. And July Chicago wheat was down 4.5 at 569.75. This morning we had weekly export sales. They were pushed today because we were closed yesterday. Pretty solid on the old crop contracts. Corn 903,800. Upper end was looking for 1.2 million, but it's still a good week for corn. New crop 155,000, kind of mid-range to upper end. Soybeans 539,500 for the old crop, which was well above the estimates. They were looking for 400 on the top end. Soybeans new crop soybeans 75,200, kind of lower end of the range there on the new crop. Wheat 427,200 as expected. On the meal side, 160,300, kind of lower end of the range there for old crop meal. New crop 14,000, and bean oil net cancellations of 1,500 on the old crop. No net sales reported there for the new crop. Good morning, guys. We're going to wrap up this kind of a crazy week here. They seem to be getting crazier and crazier, but with the pause yesterday, we're gonna put a bow on it here today. Out of the White House, 2 weeks. Seems like for President Trump to make a decision with regard to Israel and Iran. Doesn't mean that he can't bump that up, but that was released there yesterday afternoon. So we'll have to see. This morning, bombs still going off in the capital of Israel, so they're still fighting pretty good there. We've got a pretty good weather system rolling through northeastern Iowa into Illinois this morning. It's pretty good activity on the radar. We'll have to see what we see for the precip side, observed precip. So we'll take a look at that. But outside of that, guys, nothing real fresh in the way of fundamentals here for us. Dustin, maybe a few thoughts to wrap us up for the week, and we'll throw around the room.
Yeah, so 4-day work week here, obviously coming in off of yesterday. We have markets, trending towards the highs. We have November beans, trading 1074.25 in the overnight session. And really that's kind of breaching where the 2025 calendar year high was, 1075.75 back in Feb. So you're going into, I think, still kind of a critical time for geopolitics and weather. And we have a lot of heat in the forecast. And I still think we have a fairly tight soybean balance sheet with some positive news on the RVO that's still being worked out, still being figured into the, into some of those longer term positions that take a while for the bigger funds to move on. And the fact that we're near calendar year highs, it could actually punch through and be a little bit more sportive than we think. So I'm still cautiously optimistic. It is that time of year. June 20th is a big date for seasonals. That's today. And it's also option expiration day for the July options. So if you're, in need of more hedging, this is around the time where we start to beef up, plan A hedging if it's profitable, which is not for most growers right now. But that might be the time to start thinking about beefing up plan B hedging here in the next week. And that is, for example, buying a put option, or if you have really strong insurance and weather has not been perfect for you so far this year, one of the things you might consider would be like a put spread to supplement the insurance. So that's, not what I believe the market should do. I actually am kind of supportive on the market right now, but I also want to concede that we have to put our hedging hat on at some points in the year and protect values. And this is usually that time where we can make some sort of decision that's between the black and white of selling or not selling, and saying we can still improve hedging with some gray area in the options market. And that's kind of my focus for the next 7 days.
Very good, Jace. It kind of interesting. We're getting into that time of year now. It'd be kind of interesting to see how we close here later this afternoon. Going into these weekends now with weather maps, heat. I think that everybody's pretty much in agreement we're going to get hot next week for kind of the next 6 to 7 days. It'll just be a race for water at that point. But I guess, what are your thoughts here, just market related, looking at?
Yeah. No, I agree. It's kind of an important weekend. We're getting to that time where weather becomes extremely important. The forecast, from what I can tell, definitely going to get some heat in the eastern belt, and some rains, forecasted as well. So the heat doesn't worry me as long as you get the rains, right? And there's definitely areas in northern Illinois, south half of Iowa. It's really been on the drier side the last couple of weeks, which isn't a problem, with some heat. And that's exactly what the doctor ordered for the last couple of weeks. But now you need it to have rain, right? So subsoil moistures are, relatively low in a lot of these areas, which we all know if you get timely rains, it doesn't matter, right? These crops are great at, resisting any kind of drought as long as they eventually get some rain. So I don't necessarily think it's, a bullish weather pattern per se, but I think the market's going to really see what these models look like coming into early next week. And if something changes and we shift some of these rains one way or the other, and we in northern Illinois and southern half of Iowa and kind of the drier area too, right? Like southeast South Dakota and northern Nebraska or whatever, kind of drier areas too. So yeah, I think it's kind of an important week to see where the rains fall next week. It's funny, like you look at these markets, and I completely agree with Dustin on what he said, right? We're getting to that time period where if your crop's looking great and you catch some of these rains and you have the potential for a big crop, I think you kind of have to bite the bullet a little bit and say, look, even if we're kind of friendly, some of this setup, in our opinion, geopolitical or all these other inflationary things are, could be really friendly, or, biodiesel, whatever that is, you still kind of have to put your hedging hat on and say, look, we got to protect some kind of minimum at a record yield if that does come to fruition. I like looking, the silver lining in these markets is these big spreads, right? So if you can store corn and beans and you look out further, I mean, there's some pretty decent prices that you can pencil a profit with good yields with some of these big carries in the market. So I think that's the way to hedge it, not with still a lot of uncertainty, looking out further, to Dustin's point, buying puts or something like that, being strategic of how you use your capital. So yeah, that, completely agree with Dustin. I think the markets are going to focus on weather here, Sunday night, Monday, and see where rain's set up. So.
Yeah, it was interesting. They were talking this morning, and it's obviously nobody's got a clue on anything, but President Trump still wants to. He's touting this bill to be done by the 4th, right? That's his objective, right? And you look at a 2-week delay in a decision in Israel and Iran, and that gets us through. It's just there's so many moving parts in the outside markets right now that outside of weather and going into these weekends. I mean, there could be something on a Friday night, Saturday morning thing that. So I guess my point is I'm highlighting just the need to be awake and be ready, because your brother has talked about it a number of times. It could be a short little sprint to try to get something done. Keep everybody on their toes here, not to get complacent.
Right. We're talking about these seasonals and it's like, we have these counter seasonals the last couple of years. So you say, well, we're supposed to be selling by June. And I agree with Justin from what he said the other day. It's like, yeah, if we have a record yield, we're probably going to be lower prices than what we're looking at today. Maybe 50 cents lower in corn or something with a really good yield. But I think the risk reward is like, okay, with a blowout record yield, we're 50 cents lower, with some good trade deals, adverse weather, you could be $1.50 higher, right? And so I think you try to weigh that of like, hedging that 50 cents lower, but I think you got to keep upside in through July and August, my personal opinion, for weather, for some of these trade deal potentials. I mean, obviously that's our business, right? Is looking at all the different outcomes and making sure that you're set up no matter where it goes. And then that's obviously what, how I think you should look at this.
Yeah, no doubt, especially with the, as ramped up as the game is right now, where it's tough. There's no margin for a lot of people, and if there is for some, that's a small margin, and you got to be on top of your game. So as Jason mentioned, it's knowing at any yield or price scenario, what is that intended outcome or that expected outcome, and is it acceptable for you? That's going to be huge for the next 60 to 90 days.
Yeah, and you can only manage what right? I mean, there's obviously some unknowns this year that we don't face most years.
Yeah.
And that's just that, everybody's dealing with that right now. So
there's something going on right now today that's gonna throw us for a loop in 30 days.
Right,
pretty confident in that.
Yeah.
Real quick here, Rye. Looks like first time in 9 weeks that cash cattle appears to be lower than the previous week, which is kind of interesting, and carved out some fresh highs for July hogs. So why don't you put a wrap on the livestock for us here?
Yeah, absolutely. It's a sad day to announce that cash trade may be a little bit lower in the cattle market. I mean, I just don't believe it, but here we are. So a little bit of trade at 231 in Kansas. So, it's early, but in dressed 376 in Iowa. So we're looking 4 to 5 lower this week in cash. The board's got quite a bit of this, I think, priced in, but overall, there's a heavy amount of commitment on both sides of this market. We've got huge open interest, and it's started to come down a little bit by 700 contracts. So it's not too big, but I still think that most of the trade's really going to be focusing on the cattle on feed report, kind of longer term. But overall, there will be quite a bit of panic if we actually see lower cash trade. I mean, the beef market has been parabolic, been up $15 in choice in just the past week. So like, you can see that packers are trying to get as much margin back as possible. Does that lead to higher cash prices? It really depends, I think, on the slaughter pace, and if we're going to keep this kind of slow, reduced slaughter pace going over the next few months. But we'll see. Just kind of seems like right now the trade is going to be very cautious on this kind of lower lower cash trade. So I think the focus is going to be on the report next week, but right now I think everybody's just waiting to see if we're actually going to have a lower cash market. So all eyes on that for right now. But yeah, on the hog side of things, new contract highs, of course, but kind of a technical formation that may get people to squirm a little bit with that doji. But on the other hand, you had carcass still higher, coming in at 118.98, and that was up 70, and belly's back up 186.03. That was up $1.90. But overall, it seems like once again, a lot of this it feels like a lot of the move in the pork market has been related to beef. Maybe not, but on the other hand, it does seem like, at least in markets previous, it does trade like a demand bull. So overall, we are in a good time of year. Demand should remain relatively strong, but the trades is starting to feel a little bit crowded. So I think the focus is still going to be on carcass for right now. And overall, I wouldn't be surprised to see a little bit of profit taking here before the weekend, especially just on the technical formation. So we'll see how it shapes up. But as of right now, the meat markets are still really strong right now. We'll just hope that continues.
Very good. Appreciate the update there, Ryland. We did it, guys. We made it through this kind of a weird week with a pause in the middle. Brings us to everybody's favorite time of the week. Brian's Fun Fact Friday. Brian, what do you got for us?
Thanks, Dan. Happy Friday, everybody, and happy official start to summer. And as Ryland constantly reminds us, we are in the height of BLT season. So I thought this would be a fun story to kick off summer. So back in July of 2008, during rush hour in downtown Chicago, traffic went to a screeching halt on the Eisenhower. Not for a crash, not for construction, but for a 300-pound hog on the run. Yep, a hog. He busted loose from a livestock trailer, hit the pavement running, weaving in and out of traffic like he was late for a Lollapalooza. Cops chased him for over 2 miles. He outran the cruisers, dodged semis, and had city workers cheering from the sidewalks. They finally cornered him in Chinatown. It took 4 officers to rail him in. But here's the best part. People felt bad for him. They renamed him Freedom Frank. Got his own hashtag, and it was granted local sanctuary to retire in. Frank became a hero, a symbol, the first pig to say, "Not today, bacon, not today." So here's some footage that we came up with. One officer trying to rail in Freedom Frank. Jack? Dan,
that looks familiar.
Freedom Frank.
Happy summer, everybody.
What could have been, Dan? What could have been?
Yeah, look at that.
Law enforcement. There you go.
I tell you what, I'll shoot first. That would have been Ryan. You know, Frank ends up going to Chinatown. That's not a real safe area.
Right? Yeah. I thought that. Happy summer.
I don't know how I feel about this AI.
Yeah, it's getting too good.
Jack and AI, this is not this is a scary deal. Very good, Bri. A lot of fun. Just came into the open here. Let's get a quick readout. July corn's down a half, 433 is the last. July soybeans are up 1 3/4, 1076.5, and July Chicago wheat is down 3 3/4 at 569 3/4 now. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.